Failing to prepare, it's like going on vacation without any underwear, uncomfortable and exposed. Yesterday's story was written in red ink. There was weakness, selling, price went from high to low. Sellers were showing their hands. While everyone else was logging off at 4 p.m. thinking there's just another dip, I was already building my plan. I knew it was going to happen. Yesterday's dip buyers were about to learn a lesson. At 8 a.m., most traders were waking up realizing you can't just buy the dip and make infinite money. The price action and pre-market is just chapter 2 of yesterday's story. I've seen this movie before and I know how it ends. Me, at 8 a.m., I wake up knowing today's payday. Yesterday's dip buyers are about to get a harsh reality check. At 9:34 a.m., the script plays out perfectly. Market opens, stops get hit, and swing traders turn unwilling investors. Panic starts to spread. Traders are asking themselves, did I just buy the top? Panic, they're freaking out. But here's the thing, I already knew my plan. All I had to do was just focus. My trading plan helped me cut down the noise and double my money all before 10 a.m. This is how you profit from an actual trading plan. This is how to plan your trade. Here's a famous quote from Ben Franklin. By failing to prepare, you're preparing to fail. Ben Franklin, wise man. You can see he even has a little Rolex here. He's absolutely stunting on them in the 1700s. But here's my version of the quote. Failing to prepare is like going on vacation without any underwear. I trademarked this, not really, but LED came up with this in 2025. Have you ever been on vacation and not packed enough underwear? You're going to be very uncomfortable. Okay, you're going to go to the beach, come back and check your suitcase, and you're going to be like, snap. Here we go again. Everyone knows when you're on vacation, you got to pack 15 pairs of underwear. I know it's a little bit gross, a little bit risque, but hey, you want to make sure that you're prepared on vacation. The same thing goes for trading. You need to be prepared. You always need to have multiple scenarios that could possibly play out so you don't get caught with your pants down. No pun intended. So what do we notice about yesterday's price action? We can see price went from the high of the day, so here's the high of the day up here, down to the lows and started to consolidate. Now, by looking at this, if a price goes from high to lows, you would assume, well, how did it get from high to low? It's because the sellers came in and pushed it lower. They were taking profits up here, and now they are now setting price to the lows. It's below the ADMA. It has multiple bear flags. There's a lot of signs here that show us that sellers are in control. Okay, you don't come in here and buy the dip here. You don't buy the dip here, or here, or here, or here. You don't buy the dip anywhere in here. You're going to wake up and have a bad time, and you're going to blow your account. There is no long signal here. The price is going from high to lows. Remember, in order to go to the lows, price needs to go lower. Therefore, the trend is bearish. Market was telling us a story. We just need to read the story and act on it appropriately. But before I get into that, did you know that my trading community is 100% free? Live trading sessions, pop-up classes, interactive Q&A, and more. If you didn't know that, the link's down below. Feel free to join. It's 100% free. All I need is your email address. Let's get into it. So here's the pre-market setup. What is happening here? We can see chapter 2 is unfolding. Remember from the intro, chapter 2 is the pre-market action. Price went from highs to lows. Okay, so then that price went like that. The trend is bearish. However, it continued to go lower in the pre-market. Everyone saw, oh no, this is the top of the market. So what are they doing? Remember, the pre-market session is the low volume session. Okay, so there's low volume. So what are people doing? They're dumping their shares. They're expecting the market is about to crash or show a little bit of weakness. So we can see this is bearish action. Bearish. What is the pre-market session? The pre-market session is a slow baby dribble. Look, it can't get above the 10-minute 8 EMA. Therefore, the trend pre-market is bearish. What is the personality? The personality here is showing the market is a little bit scared. It's a little bit timid. So how do you play it? Just like any other trade we take, we follow a simple checklist. Step 1 is we mark our levels. First level we mark, previous day low. Previous day low is always indicated by a solid line versus a dotted line. Why? Because the previous day low is a stronger level than the pre-market low. Then we mark our pre-market low. That is all you need to do. You need to mark these levels both days. So our checklist number 1 is done. Now, every trade has 2 scenarios. The one where we make an entry or the one where we don't make an entry. So scenario 1. Entry, price breaks the pre-market low, retest it or retest an EMA and continues to go lower. That would give us an entry. Scenario 2 is it holds the pre-market low, so it would hold the pre-market low and then bounce to the previous day low. That is not an A+ trade. That is you playing in a choppy range, and you could expect to get bagged. That is only two scenarios. Now, if it rips or reclaims the previous day low, could it give us another signal? Yes, but we don't have enough information to make that scenario. We cannot make a 1 and 2 scenario until that level clears, until there is a actionable signal. So there you go. We have scenario 1 where there's entry and scenario 2 where there's no entry. And lastly, and most importantly for our checklist, is we need to wait. We need the market to confirm our thesis. We need the market to show us its hand, okay? We're not going to predict where the market's going to go. We are not going to do any of that. We are going to wait and sit on our hands, literally take the mouse, put it under your cheeks, and sit and wait. Do not front run it. Do not try to do any of that. Here we go, the entry. So we can see it broke the pre-market low and it came up and retested the ADMA. So we are going to buy puts here. This is my entry, 934. Okay, date stamped everything. You can go back and you can watch this timestamp in real time. Now, every time you enter a trade, you need to have 2 good reasons, ideally 3 good reasons of why you need to enter a trade. So here we go. Why? It broke the pre-market low. Recall from our checklist, it has to break the pre-market low in order for us to trigger a short. Number 2, QQQ was weak. Okay, so QQQ is already going into the gulag and SPY is not. Remember, QQQ and SPY are loosely correlated with each other. If QQQ is getting absolutely destroyed, it's going to be hard for SPY to keep ripping up into the right. So therefore, SPY is also going to be weak. And next is below the previous day low. Remember, the previous day low is all the way up here. We're already below the previous day low. We are forming a bearish outside day. So there you go. We have 3 good reasons for why we entered the trade. Now, the exit. We can see we enter up here and we trim. We always take profits. But Ellie, why did you take profits there? First thing is first, the first trim is we're always securing our risk. And what do I mean by that? If we're going to buy, let's say, we'll do $1,000 worth, right? So we'll do $1,000 worth. If it goes, say, 100%, okay, 100%. If we sell half our position, okay, so it goes 100%. If we sell half our position, it is going to cover itself, meaning it's going to reduce our risk. We are going to automatically get our principal out and have the rest ride break even. Next is it hit our PT. So there's a reason why the PT is in blue. It's because it hit the daily 20 EMA. That is another support and resistance level that I have not covered yet. But remember, I trade with multiple EMAs, the 8 and the 20. So if it breaks the 8 EMA, okay, so here's our 8 EMA up here. And then I'll get a blue marker as well. So here's the blue marker. If it breaks the daily 8, it's going to the daily 20. The daily 20 is extreme support and resistance level. You need to have that marked on your chart. And that daily 20 is right here at the bottom. You can go back, you can back test it. Here's all my entries and my exits, and you can see exactly where I exited. Next, the momentum flush. Okay, so this is a momentum flush. So this was a big dump right off the open. Okay, so a lot of these big dumps create extended moves, especially on the 10-minute chart, on the 30-minute chart, everything like that. So they make big moves, okay? So a big momentum flush means that a lot of people are chasing it. So if we're chasing a momentum flush, you're going to have to cover more and more, and the bounces are going to be a little bit more aggressive. It is also extended on the 30-minute, and you always want to cover into 10 a.m. so you do not get bagged when the trend flips. You will see that if you go back and backtest, that's exactly what happened. So that's my exit plan. And you can see these went about 109%, timestamped at 944. Okay, so this is the 944 candle, and you can see. So literally, you enter here, and in less than 10 minutes, you made 109%. For every $1,000 you put in, you made over $1,000. That is the power with trading and something you need to understand. So before you comment, okay, so every time I do these type of videos, I always get a comment like, yo, wait, what about this? What about this? So I thought it would be fun and also, entertaining and knowledge, okay, aka a sauce alert I put on here. I'm going to address some of these comments and some questions you may have, so that way you can learn a thing or two. So why didn't I re-enter? Well, it's pretty straightforward. So this is the 10-minute chart. So I put the time frame in the top. So this is a 10-minute chart. There is no trend line break. And what do I mean by that? So if I draw a trend line, we did not continue to flush to the lows. That is a huge red flag. You need to always break the trend line in order to continue lower, or it's going to reverse on you and you're going to have a bad time. I know I said that fast, but you get the idea. A bullish engulfing candle. You can see this candle here, the high and the low, is bigger than any of these previous candles. That is another sign of a bad time. Okay, so you don't want to enter on that. When you see these big candles come in, those big candles with huge bodies, no. You do not want to short there, because this candle tells me, okay, that the bears are trapped. Okay, they got a little bit too greedy. They put their hand in the honey jar and now they are stuck. Also, dip buyers in the magical blue line, aka the daily 20 EMA. So there is a reason why this candle formed. Okay, candles don't form for no reason. It's because the dip buyers were coming in and buying it off the daily 20 EMA. And lastly, 10 a.m. Every single day, the market will make up its mind by 10 a.m. And you can see, so this is 1 candle, 2 candle, 3 candle. That puts us at 10 a.m. and that is when the reversal comes. A good rule of thumb is whatever way you are short or long at 10 a.m., you want to reduce your risk to avoid getting absolutely blasted by a candle that looks like this. If you took this bear flag up this 80 EMA and got stopped out, you are not the only one because there is a big candle here with a huge body telling me people were trapped. Now, let's look at the 30-minute chart here. So here's some 30-minute red flags. It is extremely extended. So remember, the first 30-minute candle is going to be down here. Look how much room it has all the way up to the 80 EMA. That is a ton of extension. That is a couple dollars versus a risk that you would have to risk on a 30-minute setup. Bad, 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 bad. Okay? Very extended. No touch. Number 2, 1 candle cleared the bearish range. What do I mean by that? So if we have an ugly candle, okay, big bearish candle, and you see another one come in and almost reverse it, it cleared the range. It snapped out all of those shorts immediately. You do not want to get involved in that because there's probably some bears that are still trapped, especially institutions. They can't flip-flop back and forth as quick as retail and other, family office type traders. They can't do that. Institutions, they need a lot of runway. Think of like an airplane. They need a lot of runway. So they are going to frantically cover and cover and cover to get out of the position. Additionally, it pushed above the opening range high. So the first 30 minutes is the orb high. Okay, so opening range high. If you clear the range high, opening range high, that is not a good sign for the bearishness. You do not want that to happen because you're going to have people who use that orb high or that opening range high as their risk. And again, they're stuck. Additionally, and lastly, is you can just tell shorts are trapped in this based off the price action. A lot of people are bagged, so you do not want to get involved in it. So you take your profits, and once you see that candle in, it's hands off. Hands off. So hopefully you like this idea of me putting the sauce first and then kind of talking through of why from different time frames. That way you can learn. So here's a technical story. So let's tie it back to the actual story. Price went from high to low the previous day. Okay, remember that. Price went from high to low. Sellers are in control. Below the 80 EMA, sellers are in control. And then it formed a consolidation box at the end of the day. Okay, so this is key. Now, if you remember, there's this pattern that looks like this. It looks like a bear flag because price went from the highs down to the lows, and now it is consolidating. So now I draw that technical flashcard you've probably seen a million times, and here you go. This is exactly what it looks like. It's consolidating down here. Price went from high to lows. It is bearish. Okay, so it rested the rest of the day, meaning it just chopped people up, getting ready for the next day's move. Additionally, if you look at the SPY chart, it was a little extended, so it needed that dip to come down to the 20 EMA. Remember, we don't just come in and short highs because we think the stock is too high. It needs to have a decent amount of gap, so that way, when we round trip it, okay, we can play it to those daily EMAs and make money on the way down. I like to think of these as money ladders, right? You break the 80 EMA, you're going to the 20, and you break that one, you're going to the EMA I'm not going to tell you about. Next, is there was a weakness across the market. So a lot of names were rolling over, okay? They were rolling over, they were weak, everyone was taking profits. It wasn't really like a crash type bearishness or weakness. It was more of just a profit taking. Everyone's like, okay, we ran a little bit too much. Let's take some profits just in case the market gets a little freaky deaky and we don't want to lose a bunch of money. But remember, trading is all about understanding the story, the big picture. You have to understand the story. You have to understand chapter 1, which is what levels to draw. You have to understand chapter 3, which is what stocks to trade, and chapter 4 of where to take exits, right? It's all a story. It's all a book. And the candles are what tell us the story. So let's explain it. So I know we talked about candles going from high to low, okay? But it's because this is so important, the daily candle stories. We can see when a price goes from high to low, this is what the opening daily candle looks like. So I'm going to walk you through of the chapters of the daily candle story, which will give you conviction hitting those day 2 shorts. So at the open, this is how it looks. But then price tries to make a high. So now it looks like we kind of have a green candle. But why is there this giant wick here? Well, it's because the sellers came in here and stomped it. And what happens? Exactly what happened. The sellers stomp it all day, and we go down and we close right here. But I want you to know something. These wicks down here, these are either short coverings, or I like to call them as the stupid dip buyers. So how do we incorporate this into our trading plan? Very simple. What happens to these stupid dip buyers? So we talked about these stupid dip buyers over here, did we not? We did. This is also the previous day low. So if you are a stupid dip buyer and you come in, you're blindly buying the dip, and maybe you read chapter 1 of a technical analysis book and risk management book, where's your stop loss going to be? Okay, well, if you bought the low a day and you closed up here, this is going to be your stop loss. It's going to be this little zone. That means that if you break the previous day low, all those stupid dip buyers, their stops are going to get wiped out. And that's exactly what happened. So how did my trading plan give me an edge? A lot of the times, traders come to the market about 2 minutes before the market opens, and they have no idea what they're going to trade. They'll ask me, yo, Ellie, what are you going to trade today? And I reply, you didn't do your homework, so I'm not going to tell you. Now, we analyze the previous day's action, so we can see that SPY went from green to red the previous day. So that means we're automatically going to have a somewhat bias to a day 2 short, because that way we can take it and short it the following day because price went from green to red. When there's a weak close, when a lot of names are closing weak, okay, meaning bearish, you can likely assume that it's going to continue into the next day. And we can see pre-market, we slowly faded. We sold off a decent amount pre-market. It's because people are hammering the bid, aka they're selling their stocks. Next, we have room to the daily EMAs for a dip. So if you're looking at a stock and it's super extended from that daily 20, we call that a reversion trade. So we're going to short it down into the EMA only when it confirms. This is how you protect your portfolio from drawdown. Now, remember, you can learn all these technical concepts and get really confused and deep into the weeds, but it doesn't matter, okay? Once the pre-market broke, it's a short. It doesn't matter all these different things we just talked about. Okay, you're below the previous day low, you're below the pre-market low, it is a short. Please, less thinking, more button clicking. Sure, all these concepts could help you become a better trader and hit better price targets, but it doesn't matter. You break the pre-market low and price goes from high to low, it's a short, non-negotiable, don't think too much about it, and just click the button. So here's some tips for you moving forward to help you understand the story. When in doubt, zoom out. And what do I mean that? If the stock is super extended and has gone up in a row for 15 days, maybe zoom out and go, where would be the ideal dip buy spot? Okay, then I'm not going to long this thing unless it has relative weakness. I will short it down to that spot. But when in doubt, zoom out. Ask yourself, who is in control? Are the sellers in control? Again, if price went from high to low, is the sellers in control? Or are the bulls in control when price went from low to highs? Ask yourself, who is in control? Be kind to yourself. If you're not catching these big moves off the open, or you're not hitting multi-baggers, that's okay. But be kind to yourself. Too often, people will be like, oh, like I'm a dummy, like I missed this, and blah, blah, blah. And they really get negative to themselves. And that's not how it works, okay? We're not professional athletes where if we miss a catch in the Super Bowl, everyone memes us on the internet. We're just sitting in an office clicking buttons by ourselves. No one is around to judge us. Therefore, you need to be kind to yourself. Just take anything that was missed or anything you botched as a learning lesson. The most important thing is review price action at night. I can't stress enough how important this is and how much this helps me. I'm telling you, at the end of every single trading day, I want to see what ripped, what didn't, what sold off, because that way I already have a focus list going into the next day. I'm going to look for day 2s, day 3s, day 4s. I'm really going to be focused on that price action at the end of the day. Also, at nighttime, when you have a little bit of quiet time, I find that I'm more focused. I don't have the drama or, the stress from the day. It's just my time. It's my reflection time, and I take it extremely importantly. And that's also where I make most of my money, is scanning at night. Additionally, approach each day with 2 scenarios. Hey, what if your trade goes wrong? What if you get bagged? What would that look like? I want you to start practicing visualizing it. That way, when you come to a trade, okay, well, scenario 1 is my entry trade. Scenario 2 is my no entry trade where I get stopped out trade. What happens? Okay, well, I know on days like this, blah, 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 you can start doing the percentages and get really crazy into the data, into the technicals. And that way you'll be good to go for those day 2 scenarios. Sorry, not the day 2 scenarios, the 2 trade scenarios. I want you to see the good and the bad and think about both. That way, when the good prints, you can hammer it with confidence. And when the bad prints, you can avoid it. But before we go, I have one question for you. And that question is What would be your trading story? Whether you're new to trading or you're a veteran of the game, is what do you want your trading story to be? Do you want to be that guy that turned X amount into millions? Or you that guy that retired his wife or whatever? When I send videos to people, I always ask them a question. And a lot of you message me saying you want to retire your wives, your family members, and make that a part of your trading story. Don't give up. Always keep your head up. Be positive. Help others. That is all I have for you today. Peace.